Yes, rate momentum has absolutely shifted. We saw the 10-year Treasury drop significantly today. We saw mortgage-backed securities take off. But at the end of the day, the bigger question is it going to last and can they go lower? And as I've been saying now, like a broken record, it is going to take time. So although we got a good significant movement today, I had already clearly said I think that the 10-year Treasury with oil coming down should be between 4.35 and 4.45. I want to say we're sitting right about 4.4. So I'm right in the middle with that big move today. Now, is it going to last? Data is going to determine that. And we have significant data coming out tomorrow. We have PCE tomorrow. It is the Fed's favorite inflationary number. And I think inflation may show a rise tomorrow. I don't think interest rates are going to drop with all those people that are online saying oil is now below $70. They're going to see interest rates plummet. It's clearly not the case, and they don't know basic economics. Because if that was the case, if I go back and I look at where oil was in February, it was trading at around $66 a barrel. We were sitting at 6% on a 10-year. Well, today we're sitting at about 6.5%, and the price of oil is just below $70 a barrel. So that math doesn't make sense. And the reason it doesn't make sense is because there's basically three things that affect interest rates. You got a labor market, which appears to be strong according to the Fed's numbers. The second thing is going to be inflation. We need to see consecutive months of that pulling back. It isn't going to be, oh, oil dropped, all of a sudden inflation goes away. That's not how it works, unfortunately. And the other thing is just the Fed. They went from a very dovish approach to a very hawkish approach because of the conflict. Well, now that the conflict is over, do they once again change their tune? But they're only going to change their tune if we see the data support them changing their tune. Everyone still is uncertain of how long this is going to play out. How long will the effect of those higher energy prices have on inflation? So that's the big thing that's in play right now. So who am I? My name is Kevin Weidmark, a.k.a. The Mortgage Mouth, coming to you every day of what happened in the marketplace, how it affected interest rates, what do we have in the foreseeable future, and should we float or lock? So with regards to locking, I would seriously consider locking today. I anticipate that inflation is going to get a higher read. It's going to wipe out all the gains that we saw today. So if you need to lock based on a timeline, I would absolutely look at it today. And as always, be strategic. Utilize that yield spread premium, have the right lender so they can pay for your closing costs, saving you thousands of dollars, creating more affordability, knowing that you're going to want to refinance in the future. All right, y'all. Have a wonderful evening. Be coming to you tomorrow. Make sure you hit that subscription button. Cheers.